South Africa now has the fifth most reported COVID-19 cases globally. And as we shoot towards the peak of the virus, our economy is under immense pressure, to put it mildly. Now, there have been calls for government and the private sector to work together on basic initiatives to get us back on track through this economic crisis. And many ordinary South Africans have lost their jobs. Others have had to take pay cuts. Many have had to close their businesses. And in some instances, more and more people find themselves being the only income earner within an extended family setup. And that, of course, leading to a large percentage of people being unable to service their debt and also find themselves on shaky financial ground. So to discuss this further, we joined on the line to look at how to mitigate the negative economic impact of the coronavirus pandemic. We have with us Lungisa Fuzile, who is the Chief Executive of Standard Bank SA, joining us on the line. Mr. Fuzile, thanks so much for your time this morning and welcome to Morning Live.
Good morning, Sachin.
So can we firstly just take a quick look, a snapshot at the impact that this coronavirus has had, not just on the banking sector, but also a little more specifically on Standard Bank SA and its customers?
Thank you, Sakina, for the opportunity. The first thing that COVID has done is to disrupt what we've always known as normal. If you take a bank like ours, we have got a network of branches where we normally receive customers, serve them, and safely so. As a consequence of COVID, we have had to reorganize ourselves the way we serve our customers, minimize human contact, make sure that we close down some branches, even the branches that are open to as little as possible, have as small a number of people as possible, so that from our side, the number of our employees that are exposed to the virus is kept to a bare minimum. At the same time, we are trying to make sure that when customers come, there is social distancing and all that goes with making sure that they are safe. So there is a sense in which normal life, insofar as banking is concerned, has disrupted to a degree. Fortunately, we have always been on a journey to digitize, on a journey to make sure that we are accessible to our customers 24/7, regardless of where they are in the country. So what that has enabled us to do is to be able to reach out and service our customers as much as possible. Many of them, of course, have their lives disrupted. They can no longer work. They are not earning incomes, whether it's individuals or businesses, big and small. So we have had to take steps to make sure that we reach out to them, we enable them to stay in business, to salvage whatever they could insofar as their businesses are concerned, insofar as the productive capacity that they had installed is concerned, so that beyond the crisis, or as we learn to live with COVID better, then they don't start from scratch. They build from somewhere and begin to produce and to serve their clients, and of course continue to be a good banking customers of ours.
And just staying with that thread, Mr. Fuzile, when we talk about good banking clients and what we've seen, some of the disruption that COVID-19 has brought with it, where you've seen customers who've perhaps never defaulted on a payment, who now find themselves without a job. So what sort of measures has the bank come up with to try and assist those who have lost their jobs under these circumstances, who can no longer afford to pay their bonds, their car loans, their credit cards, etc.? Are you trying to come to their aid?
Trying is an understatement, Sakina. We have gone all out, and I mean all out. We didn't wait for the customers to come to us and say that their lives have been disrupted. The activities that have always been generating income for them have been stopped. We sent out communication en masse to indicate to customers who have got different kinds of credit with us, be it a home loan, a personal loan, a credit card, a vehicle that is financed with us, we said to them, for the next 3 months, which we have extended now, we have said you don't have to pay an installment if you can't. But if you happen to be lucky, you happen to be fortunate that you still can afford to service your debt, then let us know. So we made sure that we flip the way we relate to them. We get responsive so that they don't have to go through the trauma of asking or applying and not knowing that they would get the approval. So we did the same even with big businesses. I'm talking about wholesale customers, where they tend to have tailor-made solutions, and by their nature, you can't use a kind of one-size-fits-all type solution. We reached out to them, interacted with them. We continue to do so to look at their situation over the next while, and we worked out solutions that fit their circumstances. So we're fairly reasonably happy with what we've done so far. The question then is, for how long will the situation last? And before, of course, we can return to either the old normal or a new normal, in which case then we will recalibrate when we reach that stage and see how best to continue to serve our customers.
And I'm glad you mentioned that, Mr. Fuzile, because I was going to ask you about repossessions. How have you dealt with that particular situation during this time of COVID-19?
As I indicated already, Sakina, Standard Bank had always been, having the strategy to digitize, to make sure that people can access our services, can originate loans digitally. We launched just slightly over a year ago, I think, one of the cheapest accounts. We normally joke about it that it's as cheap as a loaf of bread, if not less so, to just open and maintain on an annual basis. It's called MIMO, where a person can go to an ATM and or use their cell phones and be able to first become a customer of Standard Bank. They can do the so-called KYC, know your customer stuff, which is submit all the necessary documentation to prove that they exist and they can be traced, and therefore the account is not opened with ill intent. They can go beyond just becoming customers of the bank to then originating a loan. In other words, apply for and obtain a loan. And we've got many of those, hundreds of thousands now. So I am saying a whole range of our products are accessible digitally. And that has enabled us then, with the advent of COVID, we merely accelerated that. In other words, we expanded our capacity and our ability to serve customers remotely. And that is continuing. Occasionally there are glitches because there may be load shedding in one area, bandwidth might be a problem in another area. We acknowledge those. And of course there's a constraint of just the sheer capacity of our call center, so that where people need a human touch, another human being at the end to hold their hand and enable them to access the product or have the questions they have, whatever it might be, answered, then the capacity of the system has not been tailored for the demand that there is. But we make adjustments on the go to make sure that we can always serve our customers optimally.
Yeah, Mr. Fuzile, I don't think my question has been answered, in that I wanted to know whether Standard Bank has actually carried through any repossessions during this time of the lockdown. That's what I was asking.
I thought you were talking about repositioning.
No, the repossessions.
Forgive me.
Yes.
No, we haven't carried a single repossession that is occasioned by the fact that people stopped paying because there was a lockdown.
Good
Not
to know
one.
that. And then the other question is, of course, the cooperation between yourselves and government, and very often we hear that government and the private sector need to work together, but there does seem to be a level of distrust between the two. So how has that been realized as far as the banking sector and Standard Bank in particular, and the assistance from government?
Our working together with government, and dare I say, the regulators that oversee what we do, be it the Prudential Authority in the SAB, the FSCA, the New Financial Sector Conduct Authority that regulates conduct-related issue, how we treat our customers, and of course the National Credit Regulator. We worked reasonably well, in fact exceptionally well with all of them, Sakina. You would know that in around about May, I think, 11th, we switched on, all of us as banks, the loan guarantee scheme, totaling maximum, when it's fully drawn out, 200 billion. There is no better way to show cooperation between government, the regulators that are independent, and banks than that. And in fact, through that action, we are busy approving and dispersing loans to businesses. And just last week, we agreed some amendments to that scheme to make sure that it is open to a larger spectrum of businesses, so that we can save more businesses and save more jobs and be able to have a quicker and faster recovery when normality returns. So we were working very well. That doesn't mean that we agree first time on everything, but that we see that as Standard Bank as something that's very normal. If we were to agree first time on everything, then maybe there would be a need to examine what is actually happening.
Mr. Fuzile, we are hopelessly out of time, but very briefly, what can be done to reignite the economy?
We need all shoulders to the wheel. Government must lead. Business must get its capital to work. And of course, Labour must ensure that it plays a positive part in all of that. And the signs are there, Sakina. You have seen business publishing its own proposal on the post-COVID recovery or post-pandemic recovery. The governing party has done the same, and there are so many overlaps, although some people elect to see only the differences. But there are so many overlaps. We all agree that we need growth. For growth to take place, we need policy certainty. We need the South African economy to be competitive, and in that regard, we need reliable supply of energy, well-priced, working logistics system through Transnet and others. And all of these things are there. They just need to be harnessed a bit more, and we will be on the go.
Mr. Lungisa Fuzile, Chief Executive of Standard Bank SA, thanks so much for talking to us, talking about mitigating the negative financial impact of the coronavirus pandemic on South Africa, and also what they have done as Standard Bank SA.